And in our world business news, China's economy grew more than expected by 9.5% in the second quarter. That reduces fears that the world's second largest economy may go through a hard landing. The possibility of the economy dropping sharply is very low, according to officials from China's Statistics Bureau. And also economists see less risk now of a sudden downturn. Also, the data shows that the economy is fending off well last week's further monetary tightening by the Chinese central bank. Economists expect another interest rate hike in the second half of 2011.
There's always a risk that you might get perhaps a second one as well if inflation doesn't fall quickly enough. But my expectation is that we will see price pressures moderate in the second half of the year, and so one more rate hike should be enough at the moment.
Rating agency Moodys' downgrade of Ireland's credit rating late yesterday to junk status fueled more jitters over the Eurozone debt crisis. The rating agency cut Ireland's rating by one notch to Ba1 and warned that the debt-laden country would likely need a second bailout. Only a week ago, Moodys also slashed Portugal's rating to junk status with a similar warning. This adds pressure on the EU as a contagion effect is feared to spread to Spain and Italy. The EU debt crisis is starting to become a systemic risk to the Eurozone, officials say. European Union leaders are therefore speculated to hold an emergency summit on Friday.
Well, we are expecting not so much from the EU Finance Minister Summit, because what we need here at the markets is a big throw, the big solution, and we are not expecting that on this summit of the EU Finance Ministers these days.
India's Finance Minister Pranab Mukherjee expressed optimism in the growth of India's economy on Tuesday, despite a drop in industrial output in May. He further suggested that short-term trends should not be considered as a benchmark for reviewing overall economic development. Mukherjee said that the industrial output growth in May, which touched 5.6%, the slowest pace of growth in the past 9 months, reflected a downward trend, but added that after a sufficient time lapse, they would be able to determine the reason behind the drop. Some members of the Federal Reserve are concerned about the pace of the U.S. economic recovery, especially due to the high unemployment, and are ready to step in with additional monetary stimulus. However, other FED members oppose such a step as it adds to inflationary pressures. The text showed that policy setters had discussed an exit strategy from stimulus. However, a minority of policy setters suggested that the Fed may have to consider even more stimulus if the unemployment rate doesn't drop. That's according to minutes from the Fed's June meeting. In June, the Fed said there won't be a third round of quantitative easing, QE3. Fed Chairman Ben Bernanke will today go to Capitol Hill and testify about the sputtering recovery. Before we go, here's a quick overview of the Asian equity indices as well as the oil and currency markets. And after that, we have the day's sports news for you.